Okay, a very good afternoon here on the 28th of February 2018. Rishi Patel, co-founder, Master the Markets, the Elite Traders Conference, and the Traders Open Day. And a very warm welcome into this video where I'm talking about a drawdown, where I'm talking about a loss that we've taken across a couple of trades here at Master the Markets on the dollar Swiss franc, PSWB long, money bar set up long just here, as well as the euro US dollar. Now, one of the first things that you may note and see different immediately about this update video is that I'm talking about my losses. And as a team, we talk about our losses because we're extremely confident in the edge that this trading strategy has and that it's developed. And I'm actually pleased that there are losses. I'm going to explain why that is as well. When we look back, when we suffer a series of consecutive losses like this, it's always good to look back. And this is exactly what I've done, because the reason for the review, the reason for the video as well, is just so that we understand. Myself, I do my own understanding as well by doing this review. And our community also understands as well exactly step by step why we are going through this drawdown period and what it means as well. Let's take a look. So this is the money bars trades for this year so far. If you look as well across my cash curve, across my cash tab just here, as well as my system tab, first of all, one thing that you'll see is that the cash and the system are almost identical in terms of execution. So our execution on this money bar strategy is pretty flawless. Okay. Now let's review the system results. We can review the cash results as well. It won't really be much of a difference, but I just want to review the system results because I'm going to go back and look at the testing results, which are also system as well. We want to keep it like to like. So let's take a look at this very carefully. We've got 6 trades here taken this year so far on the money bar strategy, and of which 5 are losing trades. And we can see the statistics straight away. We have a loss here of 3.88%. on the money bar strategy. Let's scroll down and let's see the numbers just here. So you'll see that 6 trades, 1 winner, 5 losers, okay, giving us a net profit of minus 3.88%. Now, when we look through history in terms of the money bar's opportunities, we'll see that this drawdown matches other drawdowns that we've had. But we're also going through some pretty unusual circumstances as well. Let me explain. The first thing that I want to review with you all is this document here, and this is the Live Trading Room Journal for 2018. Okay, let's take a look at the performance that the money bar's trading strategy has given us in 2018. Now, if we look very carefully, and these are the system results. Remember, I'm looking for system because I want to do a like for like. Okay, the system results for money bars last year have given us a profit of 15.61%. for the whole year last year. Now, if I look back at the testing, that actually exceeds the performance that we expect to gain from money bars. Let me explain what I mean. Take a look here. In 2013, we had a loss of minus 1.44% for the year. Okay. In 2014, we had a profit of 10.92%. In 2015, because of a large trade on the dollar Swiss, we have a profit of 20.31% just there. If we now look at 2016, you can see that you've got an upside of 10.32% just there. Okay, so that is also important to note as well. You can see what I'm getting at here is that the profits are pretty steady, but then last year we had an unusually large year where it yielded a 15% return. And the only time it's done that is when we had this anomaly on the dollar Swiss, which gave us 16% return in one trade. And that's what happened. So it's interesting because now we've taken that 15% off of the market. The market is obviously claiming back some profit to bring this back down to normalization. And that's basically what's happening this year. And this is also why I'm not really too worried about that. If I scroll across to Trade Journal performance, take a look. Money bar system is down 3.88%. Now, that's okay because I cannot expect the equity curve in the live trading room to make continuous straight lines. Take a look at the equity curve from last year, 2018, for what we actually achieved. you can see we're pretty much in a one way all throughout the year. So it is time to have a little drawdown. It sort of does make sense. Take a look. If I expand the equity curve out and you just look at the 19 journal, what I've done is I've just dropped another equity curve on. This is basically from the beginning of 2018, so January 2018 through till today. And all we're seeing in these last 2 months is a little pullback in the equity curve. I expect this to turn and then continue going up and make a new equity high. Now, the most important thing to understand at this stage is not to give up, because a lot of beginners, what they will do at this point in time is just say, okay, well, I gave it 2 months. It didn't really work out, and I can't really see a future in this. And that is so far off of the truth. Based on, as a professional, what I've seen, and the whole team here, the strategies we've built, what we've seen over a period of time. It is very important and critically important for your psychology to continue being consistent with the market. This is what is absolutely key. Now, there are a couple of things that I do to remain consistent with the market. I also don't like to see drawdowns, although I still know that they are a part of the business. You see, the nature of trading is this. If you want to enjoy the massive upside that you can gain from 15 minutes a day worth of work, then you do need to psychologically go through drawdown periods like this. It's going to happen. And our mentor, who is a senior quant, in a fund, he actually told us as well, even when we collate our drawdown statistics for what we can expect to see in the market, we can expect those drawdown statistics to be exceeded. And they have been. And that's okay, because all we're looking at is a slight dip in the equity curve. The equity curve, in essence, is like a graph. The equity that we generate from the markets is like a graph. It also has higher highs and higher lows. So turning points must happen in that as well. And all we're seeing here is a phase 2 move, if you like, in an equity curve. You don't need to worry about it. Don't let it stress you out. The key thing to understand at this point, this is the most critical point to understand how serious it is to be consistent with your approach. Because look what's happening on the market today. That Euro US dollar is creating yet another PSWB. Now, for us, that means there may be another potential trade opportunity this evening on the Money Bars trading strategy, as long as it comes to within the risk parameter that we need. Within 67 pips, you can see our 1.5 ATR 10 is sitting just there. If you look carefully, our maximum risk is going to be that 1.5 ATR 10, which is this part just here. 67 pips is the maximum risk we can take on this trade. As long as the trade risk is going to fit within that, we're going to take this short again this evening. It's not about stopping just because we have a series of losses. It's about being consistent with each and every trading opportunity. That is where the massive upside will come from. All we're doing is keeping the losses small so the profits can, of course, over exceed. That's the idea here. And again, same thing with the dollar Swiss as well. It's also coming back as well. And again, if it's within its 1.5 ATR 10, which this one doesn't look like it will be, then we'll take this as an opportunity as well. Okay, so as long as it's within its 1.5 ATR 10 and we get the close of the PSWB in the right place, we will definitely be looking at this as another trading opportunity this evening. So do be on the lookout for this. Just because we see bars like this, just because things like this happen in the market where we get immediate losses, the market opens and it just sinks and it goes against us, it's just the nature of trading. It's just the nature of trading. It's the market evening itself out. Last year, as I said, gave us a massive upside, the Money Bar strategy. We can look at the results because every single thing here has been logged systematically. Look at the reliability on Money Bar's system. 80% of the trades made money. And that's why we're seeing, and that is why, understand this, it's important. That is why we're seeing this year the reliability has dropped, because all that's happening is it is evening itself out. The only difference is where we do the back testing, we have a massive benefit because we can see all of the upside performance at a glance. You know, when we do the testing in the market and we've collated all of these results. This is all our research for Money Bars. You can see just how much research we've done for each currency, and that is why our conviction as a team remains solid in this trading strategy. You can see, even if you look at the results, when we look at the back testing, we can see everything in one go. But of course, in real time, it's much more difficult, because now look, I'm only looking at 2 months in one go. Psychologically, it's more difficult. So understand this, keep yourself consistent in your approach, and that is the key. And of course, if you're on one of the Vedanta Elite clients, then of course you'll already know that the Vedanta Elite system is up this year. That's helped us a little bit psychologically with not having to handle as much of a drawdown. But the key is, of course, even as the live trading room team solely by itself, this will become profitable over the period. I'm pretty confident about that. We haven't seen with this new set of trading strategies very much losses in the live trading room year on year. So keep consistent with it. It will happen, and we're continuously working on this. We're continuously making sure that the parameters and drawdowns are in line with what we're expecting. Nothing to worry about. We need to be consistent. The message is very much that. Be consistent in your approach. Don't let this phase you, and keep trading solidly and consistently. And that leads me nicely to my closing message, which is, as always, stay disciplined, follow your plan, and keep trading like a master.